friends, today's topic is depreciation. In this video, I'm going to explain the meaning of depreciation word, then the characteristics of depreciation and need for providing depreciation, causes of depreciation. So watch the video till the end. What is meant by depreciation? Let us see with one example. Assume that we are running one organization. We are running one firm. And on 1st January 2011, to manufacture some goods, we purchased one machine. We purchased it for 50,000 rupees. So this 50,000 rupees known as cost of the asset. Okay. Then from 1st January 11 to 31st 12/11, for 1 year period, we use that asset. Then what happens to its value? Will it remain same? No. Since we used it, since the asset became a second hand, on 31st December 11, definitely the asset value will get reduced. Assume that in this 1 year period, 10,000 value is reduced. So on 31st December 11, what is the value of the asset? 40,000 rupees. Then second year, from 1st January 12 to 31st December 12, we use that asset. In second year also, 10,000 value is reduced. At the end of the second year, the remaining value of the asset is 30,000 rupees. Similarly, third year, 10,000 is reduced. Fourth year, another 10,000 is reduced. Come to last year. From 1st January 15 to 31st December 15, we used it. 10,000 is reduced. And with how much worth asset we started? 10,000. On 1st January 15, the value of the machine is 10,000 rupees. In 1 year, the 10,000 is reduced. So at the end of the year, the value became 0. Now we cannot use this asset. We have to replace it with a new one. Here, what is meant by depreciation? When we are using a fixed asset continuously, that asset value is reducing, no? This is loss. This loss is known as depreciation. So depreciation means a fall in the value of fixed asset. And Accounting Standard 6 has given a comprehensive definition for depreciation word. According to that, depreciation means what? Depreciation is a charge on depreciable asset on its depreciable value during its depreciable life. In this definition, you should know the meaning of these three words: depreciable asset, depreciable value, depreciable life. First one, depreciable asset means what? First of all, asset means what? Asset is an economic resource and it is owned by us. It is owned by one business organization, and by using that asset, we can earn some income. Okay? For example, one machine we have. Who is the owner of that machine? Firm. And machine has some economic value. In terms of rupees, you can express the value of that machine. And by using this machine, we will get some income. So machine is known as asset. We have some bank balance. By using that bank balance, we can generate income in our business. Similarly, we are the owner of that amount. So bank balance, cash at bank comes under asset. Okay? This asset is divided into two types: fixed asset and current asset. Fixed asset is also known as depreciable asset. Okay? Means what? only on fixed assets we should calculate the depreciation. To call any asset as a fixed asset, that asset should satisfy three conditions. First one is that asset should be used for a long period. Second one, we should not purchase that asset for resale purpose. Then third one, that asset should have a limited life. Let us see one by one. First condition is what? Asset should have a long period. Long period means more than one accounting year. Suppose when firm purchased machinery on 1st January 11, then for 5 years they use this asset. Since asset is used for more than 1 year period, this asset comes under fixed asset. Okay. Then second one is what? We should not purchase it for resale purpose. Why we purchase this machine? Not to sell. By using this machine, we want to manufacture some goods. Means machinery is purchased to generate some income in our organization. It is not purchased for resale purpose. We may sell the machine when machine is totally damaged. On 31st December 15, since we cannot use that machine in our organization, we may sell that on scrap basis. But while buying the machine, our intention is not to sell the machine. We want to use it in our business. Okay? Then third point is that asset should have a limited life. Take this asset, machine. Can we use this machine forever? No. After 5 years, we have to replace that asset. So fixed asset means what? The life is always certain. If life is uncertain, then we cannot calculate depreciation on that fixed asset. Okay? Then this fixed asset is divided into two types: tangible fixed asset and intangible fixed asset. Tangible fixed asset means what? That asset has some physical existency. Means we can see that, we can touch it. Then that asset comes under tangible fixed asset. For example, machinery, building, land, tools, computers, vehicles. We can touch them, we can see them. So they are known as tangible fixed assets. We should provide depreciation on them. And remember, land is an exemptional case. Land may be of two types: freehold land, leasehold land. Freehold land means what? If land belongs to us, we are running a business and we are the owners of a particular land, then that land comes under freehold land. And we can use that land forever. No? Means what? Land life is unlimited. The life is not certain here. Life is uncertain. Forever we can use that land. Therefore, on freehold land, we should not provide depreciation. Okay? When we use land, land value decreases. Land gets damaged. Or land becomes outdated. No. Therefore, we should not provide depreciation on land. But assume that this land belongs to others. We are not the owners of that land. So, by paying some royalty, we have taken that land on lease base. For 20 years period, we have taken one land. Then, this land is known as leasehold land. So, only for 20 years we are going to get the benefit out of that land. That land life is only 20 years for us. After that, land goes from us. In that case, we should provide depreciation on land. Okay? Then, next type of fixed asset is what? Intangible fixed asset. Means what? There is no physical existence for this asset. We cannot see this asset, we cannot touch this asset. But asset has some value. For example, patent rights, copyrights, trademark, goodwill. On intangible fixed assets also we provide depreciation, but we should not use depreciation word here. What is a suitable word for intangible assets? Amortization. Okay? In case of natural resources, if natural resource value decreases, we should not use a depreciation word. We should use depletion word. First of all, natural resources means what? Coal mines, oil wells, timber reserves, mineral reserves. They come under natural resources. Natural resource is also one fixed asset. Why? Because its life is temporary. With every dig of a coal mine, coal get exhausted. That after 20 years, after 25 years like that mine becomes empty. So natural resource has a limited life. It is used for a long period and it is used to generate some income. So all these three rules are satisfied here. Therefore, natural resource comes under fixed asset. And if any natural resource value is decreased, don't use a depreciation word to denote that. The suitable word is depletion. If tangible fixed asset value is reduced, to denote that, use depreciation word. If intangible fixed asset value is reduced, we should use amortization word. And depletion word is to be used to denote the reduction in the value of natural resources. Clear? Then, second type of asset is what? Current asset. Current asset is also known as floating asset. And current asset means what? If any asset gives you a short-term benefit, it is known as current asset. Short-term means here less than one accounting year. For example, cash in hand, cash at bank, inventory, debtors, bills receivables. On current assets, we should not provide depreciation. Then second word is depreciable value. Means what? On 1st January 11, firm purchased one asset for 50,000 rupees. 50,000 is known as cost. And after 5 years, this asset value became 0. Now we cannot sell that asset on scrap basis. Or even though we sell, assume that negligible amount is going to come. We don't want to show that scrap value in the books. In that case, when scrap value is nil, then cost becomes depreciable value. Both are same. Okay? Assume that at the end of the life of the asset, when asset is totally damaged, we can sell it on scrap basis and some considerable amount is going to come. We are estimating like that. Say on this date, by selling this asset, we can get 5,000 rupees. Then this 5,000 is known as scrap value. Scrap value is also known as residual value or turn-in value, salvage value, net realizable value. Okay, scrap value means what? When asset is totally damaged, when we sell that asset on scrap basis, then the amount which we are going to realize is known as scrap value. So actual scrap value amount, when you'll come to know, when we sell the asset on that day only, no? But to calculate annual depreciation, we should consider scrap value. Means first time when we are calculating this depreciation at the end of the first year. In 2011 on 31st December only we should calculate the depreciation. Means on that day we are going to write the scrap value amount. So scrap value on that day means, since we don't know the exact scrap value amount, what we should do? We should estimate the scrap value. So remember, scrap value is always an estimated value. It is not the actual amount. Okay? Then assume that 5,000 we are going to earn by selling that asset on this day. Then depreciable value becomes cost minus scrap value. In first case, cost is 50,000. Therefore, depreciable value is also 50,000 rupees. Means when we add all these annual depreciations, we will get same value, cost value. But in case of this, when cost is 50,000 and we have some considerable scrap value, then depreciable value is cost minus scrap value. Okay? Means what? In this case, in second case, the total of annual depreciations should be 45,000 only, not 50,000. So remember this point, depreciable value. If there is no scrap value, then cost of the asset will be the depreciable value. If there is any scrap value, then depreciable value is nothing but cost minus scrap value. Then third word is depreciable life. Depreciable life means what? How long we can use that asset. That period is called depreciable life. See this example. We purchased the asset in 2011 year and for 5 years we used it. Then that 5 years is known as depreciable life. Don't think that we have to express that depreciable life always in terms of years. We may express that in terms of units, in terms of months, days. Okay? For example, we purchase this machine now. We can say that the estimated life of the asset is 5 years. Or we can say that by using this asset throughout its life, we can manufacture 5 lakh units. In that case, the estimated life is 5 lakh units. Okay? Suppose we purchased one car. We can say that the life of the car is 15 years. Or we can say that the life of the car is 5 lakh kilometers. In any way we can express. So this life of the asset also, when we have to estimate, when we are calculating the depreciation on that day, means even life of the asset figure also an estimated figure. Next topic is characteristics of depreciation. First point is exact amount of depreciation cannot be calculated. See this example. Every year depreciation amount is 10,000 rupees. Is it the exact figure? No. Missionary told to you, my value is reduced by 10,000 rupees. Record in your accounts? No. It is only an estimated value. So remember, depreciation is not the process of evaluating the asset. Depreciation is the process of allocation of its cost price over its useful life. Means what? Cost of the asset is 50,000 rupees. Life of the asset is 5 years. So what we did, this 50,000 rupees we allocated over the life of the asset. Every year 10,000 rupees we charged to asset account. Okay, and the total of these amounts become 50,000 rupees. So cost we allocated over the life of the asset. Clear? Then second point is, while calculating the depreciation amount, we should consider the cost price, because historical basis of accounts we are following now. Don't consider the market values. Throughout this life 5 years, market value of this machine may fluctuate. There may be some increase or decrease in the market values. We should not consider that market value while calculating these depreciation amounts. Based on the cost price only, we should calculate the depreciations. Then third point is what? Depreciation is a non-cash expenditure. Suppose we are preparing profit and loss account. You know this is a nominal account. So according to nominal account rule, debit side we show expenses, losses, credit side we show incomes and gains. Take some expenses. For example, salary 10,000 rupees, rent 5,000 rupees, depreciation 10,000 rupees. Here there is a difference between salary, rent and depreciation. Salary 10,000 rupees. So what happened here? From the firm, 10,000 rupee is going to employee. Rent 5,000 rupees. From the firm, 5,000 is going to building owner. But depreciation 10,000. Is this amount going anywhere? No. So 10,000 rupees we are keeping aside. We need not to pay this 10,000 rupees to anybody. So in case of first two expenses, there is a cash outflow. But in case of depreciation, cash is not going anywhere. So depreciation is known as non-cash expenditure. What is the meaning of that? Cash outflow will not be there in case of depreciation. Cash will not go anywhere. It remains in the firm only. The next point is what? It is a must. See, we purchased this asset on 1st January 2011 now. And assume that from 1st January to 31st December, we didn't use that asset. Firm started using that asset from 1st January 2012. Even though asset is not used, in 2011 year also, we should provide the depreciation. Because asset becomes second hand. So you may use it or not, it doesn't matter. When you buy an asset, compulsory you have to provide depreciation on that. Okay? These are the features of depreciation. The next topic is need of providing depreciation or objectives of providing depreciation. Why we should provide depreciation? Why we should learn this chapter? What is the importance of depreciation calculation in any organization? Let us see. First need is to ascertain the correct profit. See, in profit and loss account, debit side we wrote some expenses and losses like salary 10,000 rupees, rent 5,000, depreciation 10,000 rupees. And credit side, from trading account we brought gross profit. Say gross profit is 50,000 rupees, and we wrote some incomes like commission received 1,000 rupees. Assume these are the values in profit and loss account. Then we say total is more credit side. Credit side total is 51,000 rupees. And debit side 25,000. 51,000 minus 25,000 is equal 26,000 is our net profit. Okay? Assume that we didn't calculate depreciation value. Okay? In that case, in the absence of depreciation, how much will be the profit? Since loss is reduced by 10,000 rupees, profit will increase by 10,000 rupees. So net profit becomes 36,000 rupees. Is it the correct value? No. So what you are doing here? You are overstating your profit, which is not correct. Really we use that asset, so really there is a loss of 10,000. But since you are not recording that in the books, your accounts do not reflect the correct profitability. If it is a sole proprietorship, then this 36,000 will be taken by the owner. If it is partnership, then partners may take that amount. If it is company, then that 36,000 may be distributed to shareholders in the form of dividend. So what you are doing? Actual profit is 26,000, but 36,000 you are distributing to them. Then that extra 10,000 rupees, from where you are withdrawing? From capital you are withdrawing unknowingly. Assume that for 5 years we did like that. So in 2015, on 31st December 2015, when asset is totally damaged, then we have to purchase a new asset. But where are the funds for that? So for extra amount, you may have to go for loans. You cannot disturb your working capital, no? So working capital we need to meet the day-to-day expenses. You cannot disturb that money. But you cannot stop the work. You want to manufacture the goods. You need machine urgently. So from banks or from money lenders, you're supposed to take the loan. So unnecessarily you're paying interest there. And extra 10,000, I don't know, from capital we are removing that money. That is also not correct according to accounting principles. So for this sake, every year we should provide the depreciation. Then second point is what? To create provision for replacement of asset. If depreciation is provided to depreciation 10,000, then profit will be 26,000. See, salary 10,000 is going from that firm. 10,000 cash is going to employee. 5,000 rent amount is going to landlord. But depreciation amount 10,000 is not going anywhere. You know, depreciation is a non-cash expenditure. So that 10,000 rupees we are keeping aside. If it is sinking fund method, then with that 10,000 rupees we create a provision. What is sinking fund method? In later stage you will come to know. Okay. So every year 10,000 rupees we are keeping aside. And when asset is totally damaged, then these 10,000 amounts will get accumulated and total amount becomes 50,000 rupees. Then when asset is damaged, with this 50,000 rupees, we can replace that asset. We can purchase a new one. That is the advantage of providing depreciation. Then Next point is to show the true financial position. See, suppose we are preparing balance sheet on 31st December 2011. Liabilities, amount, assets, amount. Where we show machinery value? In asset side, no? Machinery. How we supposed to show this? We purchase the asset for 50,000. Opening balance is 50,000. In current year, since we use that asset, 10,000 is reduced. That is called depreciation. Then the remaining value of the asset on 31st December 2011 is 40,000 rupees. So on this date, we are having 40,000 worth machinery. Here your balance sheet is showing the true financial position. Assume that we didn't provide depreciation. Then how much will be the value of the machine on this date? Since there is no depreciation calculation, machinery value will be 50,000. Actual value is 40,000, but according to accounts, machinery value is 50,000. Then what is the use of preparing balance sheet when it is not giving the financial position properly? Similarly, when you prepare 2012 year balance sheet, then also machinery value is 50,000, but actual value is on 2012, on 31st December 2012, actual value is 30,000, but according to books it is 50,000. Suppose we are preparing 2015 year balance sheet, then machinery value opening balance is 10,000, and in current year depreciation is 10,000, then actual machinery on that day is nil. Machinery value is nil. But if depreciation is not provided, even in this balance sheet also, you are going to show 50,000 as machinery value. So every year machinery value remains same, 50,000 rupees. Even though it is totally damaged, even though value became zero, according to accounts value is 50,000, which is not at all correct. Okay? Then next point is to follow the legal provisions. According to Companies Act 1956, every company has to show the depreciation in the books. Then to know the cost of production, we should provide depreciation. For example, I am manufacturing these pens. Then I want to fix the price for this pen. On what basis I have to take the decision? Based on so many factors. And the important factor is cost of production. Means to make this pen, how much I spend, that amount we should consider to fix the price of this product. Means raw material cost I should consider, wages I should consider. Since in factory I am going to manufacture this pen, factory overheads we have to consider. Not only these expenses, even depreciation also we should consider. Then only you will get the true cost of production. Next topic is causes of depreciation. What are the reasons of depreciation? First reason is wear and tear. When we use any fixed asset constantly, then because of continuous friction, because of rust, because of chemical reaction, or because of minor accidents which are inevitable, the asset value may get reduced. Similarly, when asset is exposed to sun, rain, wind, then asset value may get reduced. For example, we purchased one car. We used it for some years. So what happens? Some scratches may come on that, or shining may get reduced. So when we use any fixed asset constantly, then slowly that asset value decreases because of all these reasons. These reasons are known as wear and tear. Then second reason is called efflux of time or lapse of time. Means what? This reason is applicable in case of patents, copyrights, leasehold property. Take one example. Suppose in 2011 year, firm took one land on lease basis and lease value is 10 lakh rupees and lease period is 10 years. Okay? So when 1 year completes, then leasehold property value becomes 9 lakh rupees. Then when second year is completed, then lease value comes to 8 lakh rupees. Like that, with the lapse of every year, the leasehold property value decreases. What is the reason here? Due to wear and tear? No, the reason is due to passage of time. Okay, this may be a reason for decrease in the value of an asset. Then third reason is called obsolescence. Obsolescence means what? Becoming outdated. When computer is invented, typewriter became obsolete. So typewriter is in proper condition, but we cannot use that. We have to replace the typewriter with computer to meet the competitive world. Okay. Similarly, when smartphone came, regular phone became obsolete. When color TV is introduced, black and white TV became outdated. So this reason is known as obsolescence. Not only that, not only due to technology, sometimes due to government rules, if present asset value is reduced, that reason is also known as obsolescence. For example, assume that I started one liquor business. So to manufacture liquor, I purchased one machine. And suddenly, government prohibited liquor. Then I cannot manufacture. I cannot run that business. So what happened to my present machine value? Suddenly decreased. Even though it is in good condition, I cannot use that asset. This reason is also known as obsolescence.